Okay, picture this. India's financial scene just saw a pretty interesting development. Sanlam, the huge South African asset manager.
The biggest one down there, yeah.
Right. Well, they've just put a significant chunk of change, 105 crore, into Shriram Asset Management Company in Chennai. As of today, May 27, 2025, it's definitely making waves. And, well, we thought we'd dive in and give you this quick take on why this is a big deal.
Absolutely. And like you said, it's not pocket change. This is Sanlam Emerging Markets. They're a subsidiary based out of Mauritius, making a very deliberate move.
Okay.
They picked up almost 3.9 million equity shares. That's 38.89 lakh directly from Shriram AMC.
Ah, so it's what they call a preferential allotment.
Exactly. Meaning that money, the full euro 105 crore, goes straight into Shriram AMC, fresh capital.
Got it. So into their sort of war chest.
Mm-hmm.
And in return, Sanlam walks away with a hefty 23% stake.
That's right. Which makes them a co-promoter now.
A co-promoter, okay.
Yeah, Shriram Credit Company Limited, or SCCL, they're still the majority promoter, holding about 48.16%.
Right.
But with Sanlam coming in, the total promoter shareholding actually jumps up quite a bit, from around 62.5% to just over 71%.
Wow, okay. So that signals like a stronger internal commitment, maybe?
You could definitely read it that way, yeah. A consolidation of belief from the promoters.
And the stock market certainly seemed to notice. Shriram AMC shares jumped 11% on the BSE yesterday, hit 494.
They did. Yeah, a nice spike. Pushed their market cap up to around 635 crore.
It's like the market just gave this deal a big thumbs up.
Well, the immediate reaction was certainly positive, yes. But, it's worth remembering, the stocks had a bit of a bumpy ride in 2025 overall. It's still down about 15% for the year.
Ah, okay, good context. So this is a positive blip, but there's a wider picture.
Precisely. A shot in the arm, definitely, but you have to look at the trend, too.
Now, Sanlam, you mentioned they're the biggest in South Africa. How big are we talking?
We're talking serious scale. They manage around $80 billion in assets.
$80 billion. Okay, that's huge. Like, enough to buy a lot of biltong, to use a South African analogy.
Chuckles slightly. You could say that they're a major global player.
And this isn't their first dance with the Shriram Group, is it?
Not at all. This relationship goes back 2 decades, 20 years.
Right.
They've had joint ventures in life insurance, general insurance. They already hold a stake in Shriram Finance Ltd.
So this move into asset management feels more like deepening an existing relationship.
I think that's exactly right. It's a logical next step, building on that long-standing partnership, a further commitment to the Indian market.
So why India specifically? What's pulling a giant like Sanlam deeper into this market?
Well, look at the demographics. You've got 1.4 billion people. You have a rapidly expanding middle class who are increasingly aware of financial products and looking for ways to, save and invest. Sanlam clearly sees India as a key strategic growth market.
Yeah.
The potential is just enormous.
It's hard to ignore those numbers.
Impossible for a global firm with growth ambitions, I'd say.
And does Sanlam bring a particular investment style to the table? Something that might shake things up a bit with Shriram AMC.
They talk about their quantamental approach.
Quantamental. Okay, break that down.
It's essentially a hybrid. It combines quantitative analysis, so using data, algorithms, number crunching, with traditional fundamental analysis, digging into a company's health, management, market position.
So best of both worlds, kind of. Data smarts plus traditional stock picking.
That's the philosophy, yes. They believe it gives them a more robust, maybe less biased way to make investment decisions.
Interesting. Okay, let's shift focus to Shriram AMC itself, part of the big Chennai-based Shriram Group, lots of different businesses.
That's right, a well-known conglomerate.
But in asset management specifically, they're not one of the giants yet, are they?
No, they're currently smaller. Their assets under management, or AUM, are around 870 crore.
Okay, 870 crore.
Yeah.
Respectable, but yeah, compared to the market leaders.
Exactly. It's a much smaller base. But they believe this quantamental approach, now with Sanlam's backing and presumably expertise in capital, that's their differentiator. That's their path to growth.
And the person leading Shriram AMC, Kartik Jain, the MD and CEO, he sounds pretty positive about all this.
Oh, definitely. He's been quite vocal about it. He emphasizes that it's not just about the money, It's about Sanlam's deep understanding of financial services, their track record.
Yeah.
He sees it as a huge vote of confidence in Shriram's own strategy.
Right.
He's really talking up the potential to create innovative new mutual fund products catering to different types of investors across India.
Which makes sense, leveraging that quantamental angle.
Right.
Now, you mentioned the long history. This specific deal for the AMC didn't just happen overnight, right?
No, no. As we said, the relationship started way back in 2005 with Shriram Life Insurance. Sanlam's been steadily involved since then.
And they increased their stakes in the insurance GVs just last year.
They did. Quite significantly, actually. They took majority stakes, 50.99% in Shriram General Insurance and 54.4% in Shriram Life Insurance in 2024.
So this AMC investment feels like part of a larger, more recent push.
It certainly seems that way. The specific talks about this Shriram AMC investment, they've been going on since late 2024.
And involved getting all the necessary approvals, I imagine.
Oh, yes. Regulatory hoops are always part of these deals. They got the nod from the Competition Commission of India, the CCI, back in April.
Okay.
And approvals were also needed from the South African Reserve Bank, given Sanlam's home base, and of course SEBI, the Securities and Exchange Board of India, which oversees the markets here.
Right. SEBI approval is key. Now, there was another investor involved, wasn't there? A U.S. firm.
Yes, Mission One Investments, LLC. They came in back in 2022, taking a 23% stake in Shriram AMC.
Okay, same size stake as Sanlam is taking now.
Initially, yes, though their stake had apparently reduced slightly to about 17.7% by March of this year.
So how does Sanlam coming in as a co-promoter affect Mission One?
Well, it certainly changes the dynamic. With Sanlam now a major strategic partner alongside the original promoters, Mission One might, reconsider their position. It could perhaps open the door for them to exit their investment down the line, maybe seeing this as a good opportunity.
Interesting. Okay, so we've covered the deal, the players, the history. Let's bring back to the listener. Why should someone who's maybe just managing their own savings, perhaps investing in mutual funds, care about this South African company investing in a Chennai-based AMC?
Well, I think the most direct potential benefit for you as an investor could be access to a wider range, maybe more innovative mutual fund options.
How so?
Shriram AMC, powered by this quantamental strategy, and now with Sanlam's resources and global perspective, they might launch new products that we haven't really seen much of in the Indian market, perhaps funds tailored very specifically to different risk appetites or financial goals.
So potentially more tools in the toolbox for the average investor.
That's the potential upside, yes. More choice, maybe more sophisticated options becoming available over time.
And beyond specific products.
Well, on a broader level, a significant investment like this from a major global player like Sanlam, it's a signal, right? It's a vote of confidence in the Indian financial sector overall.
Okay.
That kind of confidence can be contagious. It might attract more foreign investment across the board, which generally leads to increased competition.
And competition is usually good for the consumer, or in this case, the investor.
Generally, yes. It can drive innovation, potentially push down costs, and improve service. But we need to be realistic, too. More competition doesn't automatically guarantee better returns for everyone, or that every new fund will be a star performer.
Right. Due diligence is still key.
Absolutely. You still need to understand what you're investing in, look at the fees, the track record, how it fits your goals. And as we mentioned with Shriram AMC's stock price, market success isn't always instant or guaranteed, even with good news.
Fair point. So looking forward, what happens next at Shriram AMC? Any immediate changes we should expect?
Well, one likely change is a restructuring of the board of directors. Sanlam will almost certainly want representation on the board, given their stake.
Makes sense. Bringing their perspective in at the highest level.
Exactly. That could influence strategic decisions down the road.
And the 105 crore, where's that money going?
The plan, as stated, is to use it to enhance their investment processes, likely doubling down on that quantamental tech and talent, and importantly, to fund the development and launch of new mutual fund products.
Right, getting those new offerings out the door. You used the term war chest earlier. It's like loading up on ingredients for new recipes.
Chuckles. A good way to put it, yes. Like getting funding to create some interesting new financial dishes, perhaps.
Okay, and there was also mention of a mandatory open offer. What's that about?
Ah, yes. Because Sanlam's investment triggers certain thresholds related to ownership and control, regulations require them, along with the other main promoter, SCCL, to make an open offer to the public shareholders.
Meaning they have to offer to buy shares from existing small investors.
Essentially, yes, at a specific calculated price. This gives public shareholders a chance to exit, if they want to, following the change in control.
Could Sanlam and SCCL end up owning almost everything if enough people sell?
Theoretically, their combined stake could go up significantly, maybe even towards, say, 97% if everyone tendered their shares in the open offer. However,
There's a catch.
there's a SEBI rule. There's a minimum public shareholding requirement, usually 25%, that listed companies need to maintain. So even if they acquire more shares, they'll need a plan to eventually bring the public holding back up to that minimum level.
Ah, okay, so they can't just buy it all up and take it private easily.
Not without further steps and ensuring compliance with those public float rules, no.
Right. Let's zoom out again. This deal, how does it fit into the bigger picture of India's mutual fund industry?
Well, the Indian mutual fund industry is, frankly, booming. We're seeing incredible growth. AUM is pushing towards maybe even crossing 50 lakh crore this year.
50 lakh crore, that's enormous.
It is, and it's driven by, rising financial literacy, digitalization, making it easier to invest, and a huge young population looking for avenues beyond traditional savings.
So Shriram AMC, while small now, is entering a rapidly expanding pond.
Exactly. And with Sanlam's backing their capital, their expertise, their global network, they have a much better shot at capturing a slice of that growth than they might have had alone.
Is this part of a wider trend? Are other big global players looking at India's asset management space?
Oh, definitely. India's financial sector is very attractive right now. We've seen other major international firms like Nippon Life from Japan, KKR from the US, strengthening their presence here through partnerships or investments.
So Sanlam's move fits that pattern.
It does. It underscores just how important India is becoming on the global financial map. But it's not all smooth sailing.
What are the challenges?
Well, there are always regulatory hurdles to navigate. The market itself can be volatile, and competition is fierce, not just from traditional players, but also from all the new fintech platforms and digital brokers.
And for Shriram specifically, that quantamental approach needs to actually work. Right.
Absolutely. That's the key. The strategy sounds sophisticated, potentially powerful, but ultimately investors will judge them on the results. The performance of their funds has to deliver if they want to gain significant market share.
It is quite fascinating, though, watching these deals unfold. The jargon, preferential allotment, quantamental, the immediate market reaction. That 11% jump, even knowing the stock is down for the year, it just shows how sensitive the market is to this kind of strategic move.
It really does. These corporate maneuvers are complex. They involve strategy, regulation, timing, investor psychology. It's a multi-layered game. Initial excitement is one thing, but sustained value creation is another.
But this doesn't feel like Sanlam just dipping a toe in the water, does it? Given that 20-year history with Shriram.
I agree. It feels much more like a long-term strategic commitment. They're not just buying a stake, they're becoming a co-promoter.
Right.
And there are reports, plans for potentially launching a broader wealth management joint venture too, called Shriram Wealth, maybe with around 200 crore in capital, perhaps later this year or early next.
So even bigger plans potentially down the road.
It points towards a deeper integration and a broader ambition in the Indian wealth space, yes. With Sanlam's backing, Shriram AMC could genuinely transform from a small player into something much more significant over time.
What are the main hurdles they might face, though, trying to scale up?
Well, the obvious one is competing against the established giants. The HDFCs, ICICIs, SBIs of the mutual fund world have massive distribution networks and brand recognition. That's tough to overcome.
Sure.
Also, adapting Sanlam's strategies, even their quantamental approach, perfectly to the nuances of the Indian market and Indian investor behavior might take time and refinement. What works in South Africa might need tweaking here.
And they still have Mission One investments hanging around, potentially looking for an exit.
That's another factor, yes. Managing that relationship and their potential future actions will be part of the landscape. And of course, navigating those SEBI public shareholding rules we talked about if their stake increases via the open offer.
So wrapping this up, it seems like a pretty significant move. Sanlam, the South African giant, placing a bigger bet on India through a deeper partnership with Shriram.
I think that sums it up well. It's a notable investment, a sign of confidence in India's growth, and it brings this interesting quantamental focus more into the spotlight.
Potential benefits for Shriram AMC, for Sanlam, and maybe down the line for Indian investors looking for more choice.
That's the potential. But as always with these things, the real impact, the actual outcomes, well, that remains to be seen. It's definitely one to watch.
It certainly is. So here's a final thought for you to consider. As more global expertise and different investment philosophies like this quantamental approach enter the Indian market, how might that change the way you personally think about building your own financial future over the next 5 or 10 years? Something to chew on.